If you have been curious about how mutual funds work, or you've been waiting to take your first step into investing, you are in the perfect place. In this video series, we are going to break down everything you need to know about how mutual fund works, from basic to advanced. So let's dive right into it. So, what exactly is a mutual fund? Mutual fund is a club of people who pool their money together. Everyone invests their money in a shared pot, and that pot is being handled by a professional money manager who takes care of everything. They spread the investment across different asset classes like stock, bonds, and other assets to grow everyone's wealth over a period of time. This helps reduce the risk and grow your money over a period of time without you being an expert. When you invest in a mutual fund, you, along with thousands of investors, pool your money together. This corpus forms a large fund wherein instead of investing directly into stocks and bonds, you purchase units of mutual fund. These units represent your share of the total fund. The appointed fund manager uses the pooled money to invest in different kind of securities like stocks, bond, silver, and gold. This helps spread out the risk and give you access to broad range of securities which will be impossible for you to arrange it on your own. As the value of investment changes, the value of mutual fund also changes. This change is reflected in the price of units, also called as net asset value, short for NAV. If the underlying investment performs well, the NAV increases, meaning your investment value increases, and vice versa if the investment is not doing well. Additionally, some mutual fund may pay out the dividend, which you might want to take out or reinvest the same for future growth. Now that you know how mutual fund work, the next big question is how to select the right fund for your goals. To make the right choice, you need to understand the different types of mutual fund. Let's break it down. Mutual funds are broadly categorized into three types: equity, debt, and hybrid. Each serves a different purpose and suits different kind of investors. Let's discuss equity mutual funds. These funds invest primarily in the stocks and shares of the companies, which is well suited for long-term growth and the people who are willing to take little bit of risk, because these funds do include some market volatility. In equity mutual funds, you have different categories like large cap, mid cap, small cap, and also flexi cap, which invest in all these caps. Next, we have debt funds. Debt funds are designed for people who are looking for stable returns over a different period of time. Also, they invest in different period of securities as well, starting from 3 months to a 10-year bond. They are going to invest in commercial papers, treasury bills, corporate bonds, and long-term government bonds as well. Debt funds also comes in different categories like gilt, dynamic, corporate, and liquid funds, catering to different needs and different time horizons. Finally, hybrid funds. Hybrid funds are funds investing in mixed securities like equity and debt or other asset classes as well. These funds are suited for mid-term goals and people who have a moderate risk appetite. They do also come in different categories like aggressive hybrid fund, balanced advantage fund, and conservative hybrid fund, catering to different needs and different time horizons. Apart from these funds, there are also some specialized funds like index fund, which invest in a particular index. Then you have international funds who are investing in international securities. You have ELSS, which is specifically designed for tax saving purposes. And then you have thematic or sectoral fund, which invest in a particular theme or a particular sector. So we have covered the basics of mutual fund and different types of it, whether it's equity, debt, or hybrid. Remember, mutual funds are incredibly versatile. Whether you are looking for long-term growth or a stable income or mix of both, mutual fund have something for everyone. This brings us to our conclusion. But wait a minute, how do you choose the right mutual fund? Let's discuss this topic in our next video.